All right, first up, let's tell you what happened in the markets today. The Nifty on its path to recovery today. It's ended above 19,100. And this advance led by Britannia and Hindalco, these two stocks. The Sensex has gained close to 500 points, and the sectors that have seen similar gains, all the sectors, in fact, ending in the green. Let's get a deeper understanding of the trade highlights. For that, my colleague Anisha Jain is joining us. Anisha, what did we close with? What did we go home with? Because today we seem to have risen, especially after the cues we got from the Fed.
Well, finally, after a couple of trading sessions, the Indian markets managed to end in the green, given the global setup was quite strong as well. So Nifty ended towards the highest point of the trading session, 19,150. The Sensex also managed to stay above the 64,000 mark. The banking names also saw decent traction, but today the biggest outperformers were, of course, the real estate pack and the PSU banking names, because these were the two sectors that were holding up in the green. In fact, most of the sectors today ended in the green comfortably. A lot of result reactions is what we were dealing with. So whether it was in Adani Enterprises that reported its numbers, or Dabur, which also reacted to its earnings, with the volume growth coming in a bit muted at 3%, there were a lot of result reactions. Even on the losing side, we had names like Sirma SGS, which was coming under pressure. Suzlon Energy by the end of the trading session saw a spike on account of earnings, and then JK Tyre was the other one that was flying away during the day. There was also Vodafone Idea that continued to gain traction, and then the power twins of REC and TFC also saw great momentum on account of the earnings as well. Britannia and GCPL were also some of the result candidates, but overall it was a good trading session coming in for the Indian markets. The broader markets continued their outperformance today as well. Let's see how it pans out tomorrow.
Let's see how it pans out for the quarters ahead as well. Let's see what the cues are, how the markets are going to move toward the triggers. And there are several moving pieces. To discuss this, Mahantesh Sabarad, the independent market expert, joining us, along with Santosh Rao, who is head of research and a partner at Manhattan Venture Partners. Great to have you both with us. First to you, Santosh Rao. Now that the Fed's decision and its stance are clear, the markets, the equities are reacting to the Fed. Now, what are the next triggers you see for the equity markets around the world? Because recession in the US, geopolitics determining the price of crude oil. What exactly are you penciling in?
Yeah, I think one cloud has kind of cleared. I think the Fed was a big issue. Higher for longer meant so many things. So I think at this point, he's pretty much said, at least the market is interpreting it as he's done, if things continue the way it is. So if inflation continues to trend down, and he made it very clear that that's his main focus, he's not worried about wage growth. He doesn't see a one-to-one correlation there. So it can still grow, but inflation is a huge issue. So price control is what he's focused on. So I think that's a big deal. So he said, barring something happening, he kept the option to raise the rate again if needed. In fact, there is some quarters of the market that think that he may do two if the things get too hot. You don't want the market to get ahead of itself. I think that's the big risk. He doesn't want the market to see that the coast is clear. There's still some dangers out there. He just feels that it's restrictive enough now at this point. He doesn't need to do much with the yield so high, inflation coming down, and the credit tightening going on. He feels there's enough there in the market to kind of slow things down. So his job is done for now. So he's going to wait and see. So that's good. So with that out of the way, so there's going to be a little bit of risk on sentiment here. So that'll come into the market. Growth stocks will take a breather here. So that'll help also. And then, of course, I think the big wild cards are the geopolitical issues. The war hopefully doesn't spread too much. And the oil crisis or energy crisis, if it happens, hope it doesn't get too big. So those things are going to play into the market now. I think in terms of specifically the Fed, which was a big issue, that I think is settled for now.
Like Santosh Rao is saying, Mahantesh, do you think that in the Indian markets, we could get ahead of ourselves? What do you expect the RBI to do now with interest rates after the Fed has made up its mind and kept that pause on rate hikes intact, just along expected lines?
So we in India have witnessed that the RBI has kept the interest steady for now considerable period of time. In fact, they paused the rate hike, if I'm right, sometime early into the calendar year. And that has meant that they have stuck to that interest rate forecast while periodically raising a bit of inflation target that they foresee ahead. But that's not a major cause for worry as far as I see. So the RBI has already paused, and I reckon that going forward, since the inflation numbers are likely to temper, growth is likely to also moderate a bit. We're gonna not see any policy actions from the RBI going forward.
Santosh Rao, today after the Fed's rally, we are seeing these bond yields come off their highs and equities are surging. But for the longest time, we've been watching that surge in American bond yields and the strength of the US dollar. How do you see these now panning out from here, and how much will that bear on how the FIIs move their funds?
Yeah, I think the dollar getting strong is always a negative. You don't want that to get too strong and then get money flow out of the Indian markets and any emerging markets. So that's always a risk. But I think at this point, the bond market was the safe haven, so to speak. No one wanted the risky asset when you can get riskless asset for 5%, 5.5%, and even more if you go down the risk curve. So I think that is to some extent, I think it is kind of that risk is kind of not there yet. So is not there. I think it has been taken off. But I'm just saying as of now. I mean, if things change, if the trends continue, I'm saying the market, the investors don't need to go there as a safe haven as much as they did in the past. So the growth stocks will come back. There is a room for them to grow. But having said that, I mean, it's not going to be off to the races. Yes, there is a slowdown going. All the companies that have reported have guided lower. They think things are going to slow down. The demand side of the equation is going to soften a little bit. So there are going to be more layoffs, so that softening is there, but it's not going to be catastrophic so that everything sells off and we go into a recession. So that's what he meant by it's fairly balanced at this point. There's enough restrictions there. There's enough on both sides. So he doesn't need to do anything. So I think that's the main thing. The bonds coming off that was a safe haven may not be for now because of what he said yesterday.
We're still out on whether or not there is going to be an American recession or not, and there are several sides to that story. But Mahantesh, in terms of corporate earnings, there is a view that perhaps now in India we'll have higher capex. What's your reading of the earnings report so far? Because some of those factors that Santosh Rao is talking about in terms of some softening there in the American economy, how much in contrast is India going to be? And what are these earnings reports indicating about the next couple of quarters that could perhaps give direction to our equities?
So let's look at what L&T has talked of after its results. L&T has kept its order book guidance steady, but they are confidently now saying that we will very likely will exceed the order booking expectations that they put out. So that tells us that there's a lot of capex that is happening, not just in the country, a bit where L&T is exposed to as well, is pulling the things along for Indian companies. Not just that, look at some of the material handling equipment kind of companies or cranes and infrastructure related equipment manufacturing companies. All those companies in the past 1 year have done relatively better, not just in terms of stock price movement, also in terms of their performance. Although some may have had margin worries. That tells us that the capex story is in a way still intact, while the overall consumption story is definitely slowing down. HUL results tell us that there has been very limited amount of volume growth that has happened. Whatever growth they have been able to garner thus far has been from the price value kind of growth and not through the volume growth. And we are gonna therefore see a rebalancing of the economy with the capex side actually doing better relative to the consumption side. So investment sides will likely make up for the consumption side kind of drop, although there will be a little softness in net growth aspects.
Belief in the Indian markets, and that is that India doesn't need big triggers right now to move our equities one way or the other, but the need for global stability is of paramount importance. Whether we'll get that or not with all these geopolitical concerns, that remains to be seen. But that's where we're leaving it. Santosh Rao and Mahantesh Sabarad, it's always a pleasure getting your perspective. Thanks for joining us on India Tonight.